Hello, everyone. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started. Markets are up today. Dow Jones is up 0.1, Nasdaq is up 0.6, S&P 500 up 0.3, Russell 2000 up 0.5%. You can see in the S&P 500 the heat map that most mega tech stocks are up, except for Apple, down 1%, and Tesla also down 1%. Some chip stocks are down. Nvidia and Broadcom are up 2%. Healthcare plant stocks are down, and consumer defensive stocks are down generally as well. Big news today, ex-CEO Linda Yaccarino steps down after 2 years at the job. Linda Yaccarino, CEO of Elon Musk's X, announced on Wednesday she's leaving the job. After 2 incredible years, I've decided to step down as CEO of X, Yaccarino 61 announced on the social media platform formerly known as Twitter. When Elon Musk and I first focused on the vision of X, I knew it would be the opportunity of a lifetime, etc., etc. Her departure comes at a time when Elon Musk has leaned further into politics, suggesting the U.S. needs a third political party following his public feud with President Trump. It also comes about a month after the Wall Street Journal reported that X threatened lawsuits against ad buyers such as Verizon and Ralph Lauren if they didn't spend more. Wow. The paper said at least half a dozen companies have struck ad deals after being pressured. That's incredible. Quote, there was no comment in the article from us, end quote, Yaccarino told Yahoo Finance last month. There was also no named sources in the article. They had some random third parties comment on unnamed sources. So with the absence of both facts and named sources, and then the absence of the setup of this story, which was the House Judiciary Committee's findings and evidence that addressed a real coming together to boycott the platform. A Long Island native, Yaccarino stepped into the CEO role on June 5, 2023, about 7 months after Tesla chief CEO Elon Musk finalized his $44 billion takeover of the platform. A veteran media executive, Yaccarino spent 12 years at NBC Universal before being handpicked by Musk to bring in ad sales. Since taking the reins, she's navigated Musk's controversial posts, his full-blown support of Donald Trump, and backlash over his Doge initiative to cut government waste, which was followed by a recent breakup between the president and the billionaire. The social media app has been pushing subscriptions to diversify revenue and drive Musk's Everything app vision. X will also launch X Money this year with peer-to-peer payments. Investments and trading capabilities could follow. As Yahoo Finance executive editor Brian Sozzi recently reported, Musk's AI startup XAI completed a takeover X valued at $33 billion, below the $44 billion he shelled out. Musk said at the time of the deal that X is valued at $45 billion, excluding the $12 billion in debt, which he took out of his purchase. Interesting article, claims by a former Tesla executive. Musk is struggling to understand what's happening around him, says former Tesla executive. Tesla investors are clearly worried that CEO Elon Musk's fiery new pledge to build a third U.S. political party could inflict even more damage on the embattled company. The EV maker has been put through the ringer by Musk's antiques, from cratering sales worldwide to an enormous drop in year-over-year revenues. The company's finances are in free fall, and now that President Trump's so-called Big Beautiful Bill has passed through Congress, Tesla's crisis could soon take a major turn for the worse, the Financial Times reports. To insiders, it seems that Musk has been struggling to understand what's happening around him, never mind the impacts of his own erratic actions, and his latest moment of lucidity is a little too late, too little too late. Elon has finally woken up to this, but talk about a day late and a dollar short, one former Tesla executive told Financial Times. Trump's bill is set to obliterate clean air credits, which have historically represented billions of dollars worth of profits to Tesla, a sizable chunk of its overall revenues. The Trump administration is also planning to blow up a $7,500 federal tax credit for eligible EV personnel leases, as well as wind and solar energy tax credits. Tesla has greatly benefited from both. Finally, the president's unpredictable tariff war has thrown Tesla's supply chain with China into chaos. In short, Trump's second term has been nothing short of a disaster for the EV maker's bottom line, A bizarre reality considering the CEO has spent hundreds of millions of dollars getting him elected. It's more than $300 million. But Trump's bill proved to be the straw that broke the camel's back, ending their budding bromance abruptly in dramatic fashion. This is terrible policy and a devastating blow to Tesla's bottom line, the former executive told Financial Times. It's everything together: tariffs, the $75 consumer credit, the manufacturing tax credits, the charging credits, and the solar residential credits. Whether Musk's reinvigorated attempts to shoehorn himself into the world of politics will turn things around for Tesla feels like an extraordinary long shot. The car maker's efforts to double down on a Waymo-like autonomous robotaxi service have been suffering from technical glitches and dangerous close calls. Consumer demand for its vehicles has dropped considerably, despite surging interest in EVs overall, particularly in Europe. That's in large part due to Musk alienating embrace of extreme far-right ideologies and any new fans he gained in the world now put off by his feud with Trump. And any hints of contribution from Musk still feel opaque at best. Contrition. In a tweet last week, Musk somberly reflected on parading across the stage next to Argentinian President Javier Milei in February, wielding a shiny metal-plated chainsaw in a ham-handed gesture representing his indiscriminate gutting of federal agencies. Milei gave me the chainsaw backstage and I ran with it, but in retrospect, it lacked empathy, he wrote. No shit. Okay. In line with him struggling to understand what's happening around him, the Model Y specs compare very poorly to other options, 4 other options in China. As you can see on your screens right now, the Model Y is the most expensive vehicle out of the 5. Starting price, most expensive, and the range is the lowest. And when you're buying an EV, the range is the most important thing for potential buyers. On top of that, the charging speed is also twice as fast for other vehicles versus the Tesla Model Y. The BYD is the cheapest option here, and even that is better in terms of range and the charging speed than the Model Y. But these other 3 are, killing the Model. Is going to kill me. These 2 vehicles came out in the last couple of weeks, so we're going to see what they do to Model Y sales in the coming months. On the other hand, Uber stock is up more than 60% year to date as it leans into AV partnerships. Tesla bulls used to say that Uber would go bankrupt when Tesla started robotaxi service, but up 60% year to date. Ride-hailing giant continues to see positive development despite and possibly because of AV competition. If you can't beat them, join them. That, it seems, is a key part of the strategy for Uber as the company faces burgeoning roster competitors in the autonomous vehicle taxi space. Despite the specter of competition from the likes of Tesla, GM, and new entrant Amazon, Uber's stock price has soared more than 60% from the start of this year to a new all-time high. This comes at a time when the ride-sharing giant is joining forces with others in the AV space. Investors are pleased. Case in point, on Monday, Alphabet's Waymo partnered with Uber since 2023 and considered by analysts to be one of the most crucial partners, announced an expansion into Philadelphia. Uber's stock traded up on the news. The following day, Bank of America increased its price target for Uber from $97 to $115. Uber is 100% focused on the partnership model, Bank of America analyst Justin Post told Yahoo Finance. That seems to be part of the multiple expansions for the stock. The stock price has also been buoyed by several recent developments that have helped the company keep up positive momentum throughout the first half of the year. Fundamentals suggest that Uber's popularity is continuing to grow. Bloomberg's second measure data, which tracks consumer purchases, indicates that bookings accelerated by some 1.4% in the second quarter compared to Q1. Growth in Uber's mobility division, which covers ride-hailing, and its delivery division accelerated by 1.5% and 0.9%, respectively. The average price users are paying per ride was also up approximately 8.4% in Q2 compared to the same quarter last year, according to Bloomberg data. One potential wrinkle: Uber is currently facing a lawsuit from the U.S. Federal Trade Commission, which alleges that the company engaged in deceptive billing practices, including charging users for its Uber One subscription without their consent. The passage of President Trump's One Big Beautiful Bill legislation package may also provide a boost to Uber. Given that the no tax on tips provision in the bill applies to independent contractors as well as employees, Bank of America analysts predicted in a recent research note that the drivers at ride-sharing companies like Uber and Lyft could see as much as a 2.5% increase in their pay. It does make working for Uber a little bit more financially attractive, the Post said. Excuse me for 1 second. Okay. Next, let's look at the overall market news here. Wall Street shakes off tariff concerns. Nvidia leaps to $4 trillion. Wall Street main indices ticked up on Wednesday as Nvidia rocketed to a $4 trillion valuation, while investors took in their stride President Trump's latest tariff salvo. Nvidia rose 2% and became the first company in the world to hit $4 trillion market value, solidifying its position as one of Wall Street's most favored stocks to tap in the ongoing surge in demand for AI technologies. It highlights the fact that NVIDIA is sort of the backbone of AI infrastructure, and it is indicative of the revolution that's going on in technology. I believe that there is still more upside in this stock, said Robert Pavlik, senior PM at Dakota Wealth. Trump ramped up his trade offensive on Tuesday, announced a 50% tariff on copper and vowing to slap long-threatened levies on semiconductors and pharmaceuticals. This came just a day after he jolted 14 trading partners with a fresh wave of tariff warnings and said that at least 7 new notices would drop later in the day. Markets' reaction had been relatively stable, with analysts noting that investors have become used to Trump's pattern of saber rattling on tariffs and that the White House will potentially back down from its most aggressive threats. With the deadline for new tariffs pushed to August 1, investors are betting that negotiations will diffuse the risk of a full-blown trade war. The tariff issue continues to be the sort of seesaw, and because of that back and forth, it obviously has given investors a bit of a calm, said Philip Blancato, chief market strategist at Osaic Wealth. The European Union said it could reach an online trade agreement with the US in the coming days. Meanwhile, after last week's record closes for the S&P 500 and the Nasdaq buoyed by a surprisingly robust jobs report, investors are turning their attention to Thursday's initial jobless claims for the next pulse check on the labor market. Traders will also parse through the minutes from the Fed's June meeting due at 2 p.m. for any hints about when the policymakers might resume easing rates. While the July rate reduction is almost fully ruled out, the odds of a September cut stand at about 64%, according to CME Group's FedWatch tool. Trump's erratic tariff actions have sparked concerns about global growth and inflation, while also complicating the work of the Fed, which has adopted a wait-and-see approach on monetary policy. Among stocks, AES Corp jumped 16% after Bloomberg reported that the power provider was exploring options, including a sale. Health insurer United Health Group slipped 2.4% after Wall Street Journal reported that the U.S. Department of Justice was investigating how the company deployed doctors and nurses to gather diagnoses that increased its Medicare payments. Boeing advanced 4% as Susquehanna raised its price target after the plane maker on Tuesday reported that its airplane deliveries in June increased by 27% on a yearly basis. Double-clicking into tariffs, Japan and South Korea face 25% tariffs as Trump ramps up trade war in letters to 14 nations. Interesting that the markets are reacting to this news, frankly. U.S. President Donald Trump on Monday ramped up his trade war, telling 14 nations, from powerhouse suppliers such as Japan and South Korea to minor trade players, that they now face a sharply higher tariffs from a new deadline of August 1. The imposition of a levy of 25% on U.S. importers of all goods rattled Wall Street, with the S&P 500 index knocked back sharply, though markets in Asia were taking the news in their stride. In letters so far to 14 countries, Trump hinted at opportunities for additional negotiations, even while warning that reprisals would draw a like-for-like response. If for any reason you decide to raise your tariffs, then whatever the number you choose to raise them by will be added onto the 25% that we charge, Trump told Japan and South Korea in letters released on his Truth Social platform. The higher tariffs take effect from August 1 and notably will not combine with the previously announced sectoral tariffs, such as those on automobiles, steel, and aluminum. Countries have been under pressure to conclude deals with the U.S. after Trump unleashed a global trade war in April that roiled financial markets. Trump's executive order on Monday extends to August 1 and the Wednesday deadline for negotiations. August 1, the Wednesday deadline for negotiations. Asked if the deadline was firm, Trump replied, I would say firm, but not 100% firm. Taco. While the news is disappointing, it does not mean the game is over, added Cutler. Trump said the United States would impose tariffs 25% on goods from Tunisia, Malaysia, Kazakhstan, with levies of 30% on South Africa, Bosnia, and Herzegovina, climbing to 32% on Indonesia, 35% on Serbia and Bangladesh, 36% on Cambodia, and Thailand, and 40% on Laos and Myanmar. A deal with India was close, Trump added. Japanese Prime Minister said some progress had been made on avoiding higher tariffs of up to 35% than Trump had suggested recently. We have received a proposal from the US to swiftly proceed with negotiations towards the newly set August 1 deadline, and that depending on Japan's response, the content of the letter could be revised. South Korea said it planned to step up trade talks with the US and that the exemption of reductions in auto and steel tariffs must be included in any trade deal. Interesting. Thailand said it was confident it can get a competitive tariff similar to those on other countries. In neighboring Malaysia, the trade ministry said it acknowledged US concerns on trade imbalances and market access, while believing that constructive engagement and dialogue remained the best path forward. In Indonesia, South Asia's largest economy, and officials said Jakarta still had room to negotiate on tariffs, and its top negotiator would meet US trade representatives in Washington. The US is the main export market for Bangladesh's ready-made garments industry, which accounts for more than 80% of the export earnings and employs 4 million people. Wow. This is absolutely shocking news for us. Mahmoud Hassan Khan, president of Bangladesh, told Reuters on Tuesday, we were really hoping the tariffs would be somewhere between 10 to 20%. This will hurt our industry badly. Yeah. South African President Cyril Ramaphosa said 30% US tariffs were unjustified since 77% of US goods face no tariffs in his country. All right. Yeah, I mean, compared to early April market volatility, this is nothing. What we're seeing in the markets now. I think the market's just expecting more deals by August 1. Trump says US interest rate is at least 3 points too high. I think that's a stretch. We're going to see oil price in a second. US President Donald Trump on Wednesday called on the Federal Reserve to lower the federal benchmark interest rate by at least 3 percentage points, renewing his call for the US Central Bank to lower rates to help reduce the cost to service the nation's debt. I mean, you can see oil prices climbing back up from about below $65 at the beginning of July to now $69. So that's a $4 or $5 increase. And I think it's going to be reflected in inflation reports. So on that note, thank you very much, everybody. And I will chat with you all next time. Take care.